Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
This time of the year, Travis, people think about taxes and considering tax loss harvesting. We recently did a video on end of the year tax tips November 19th. It was a great video. People should go see it if they haven't. And tax loss harvesting was one of the ideas that we covered in that video. Another less talked about strategy, though, is tax gain harvesting. That is purposely realizing a gain in the current year.
Right, Steve. And the first question people are going to ask is, why would you do that? Why do you want to pay taxes? And the reason is you expect tax rates to go up in the future. There's a bill currently pending in the Senate right now that would apply an extra 5% tax on AGI, or adjusted gross income, over $10 million, and that's including capital gains. And that law, the proposed start date for that is in 2022. And that law will also apply an extra 3% tax to people who make over $25 million. So if you're lucky enough to be in those income ranges, taking gains this year, assuming that bill does make it to law, would save you 8%.
All right, Travis, those are some big numbers. Who makes that kind of money? Wall Street executives do, of course. Right now, according to the Wall Street Journal, insiders are selling at staggering rates. 40 executives this year have sold more than $200 million each in their own company stock. That is 4 times the average that has been sold between 2016 and 2020.
Yeah, and if you look across the S&P 500, Steve, insider sales have totaled $63.5 billion, that's with a B, billion dollars through the end of November. 50% higher than 2020, but that's to be expected given what happened in 2020. 1 or 2 insiders selling isn't that big of a deal, but when you see a trend like this, you certainly have to take note.
Travis, rarely do we know the real reason why these insiders are selling their positions. Some say it's because they have planned sales every single year that they make. A lot of the times, though, they tell us it's because of a diversification strategy that they have, and some do make charitable contributions, and so they transfer the stock to that charity and then sell it when it's over there. Or it just simply could be because we have a combination, high valuations and a higher tax rate coming to these people in the future.
Yeah, and we don't have a crystal ball, Steve, that tells us where taxes are going to be in the future. But, there's a strong probability they're not going to be any lower.
Travis, I'm going to go a step further and say it's not if they raise taxes, it's when and how much that's going to be.
I hope you're wrong, but I don't think you are. So.
Yeah. So I think what you're going to see, Travis, is they're going to start raising taxes on the wealthy and the high income earners to get people used to it. And then eventually those taxes are going to trickle down to those lower income earners, aren't they?
Yeah, and that happens at the state level too, Steve. If you look at Washington State, home to Microsoft, Amazon, they're looking at implementing a 7% cap gain tax at the state level. So states like Texas might see a population boost here.
That is true, Travis. This has been great. I look forward to it next week.
Look forward to it as well. Thank you for watching this week's Exchange.
To make sure you don't miss out on future discussions, please follow us on social media.
Make sure to like and share our videos, and we'll see you next week.